So here we go. Right. This is then the S&P and the Nasdaq together. S&P on the right, bumping up against that 20 level. I've sort of put a few little pointers in this as well. And what I'm looking for then is I'm always looking at, right, where are the markets reaching equivalent points? So this is how I'd go about scalping. I'm sort of looking at, right, where have they gone up to? Where have they dropped to? Nasdaq's just dropped down to 56, jumped up to 68. S&P's holding below 20 and is then moving down to around about 16. So you've got this kind of range in the S&P down to 16, and you've got the Nasdaq round to around 57. What we're going to go and have a look at is just scalping this area, and it doesn't look like much. This looks like pretty dull area. You've got this huge rally, you've got the big sell-off, but what goes on here is perfect example of post-event, lots and lots of volume, lots of movement in a small area. But this is also down to a technical. You can understand the technicals. This is a great area to want to be short from anyway. You can take this trade on up here. Scalp these ranges waiting for a bit of a sell-off. The advantage as well is look at the volumes. The S&P is doing 10,000 contracts a minute. Go and look at your S&P charts. Typically, a 1 minute candle, the S&P will do around about 2 to 3,000. You're doing nearly 10 on most candles here. So you've got 3 times the action, at least, even 5 times nearly. It's a huge amount more going on. So what we're going to do is go and have a little look at what exactly happens on this one. So here we go. Right. This is then the S&P and the Nasdaq together. S&P on the right, bumping up against that 20 level. I've sort of put a few little pointers in this as well. And what I'm looking for then is I'm always looking at, right, where are the markets reaching equivalent points? So this is how I'd go about scalping. And so looking at, right, where have they gone up to? Where have they dropped to? Nasdaq's just dropped down to 56, jumped up to 68. S&P's holding below 20 and is then moving down to around about 16. So you've got this kind of range in the S&P down to 16, and you've got the Nasdaq round to around 57. So this is now the idea that we're going to have a quick scalp in the Nasdaq for 10 points, and the S&P we're going to try and hold because that's bumping up against the key level. Nasdaq jumps up, and this is a classic moment where people panic, go, oh no, I need to get out of the trade, right? What I'm looking at here is where does it jump to? That then becomes my stop. So the S&P, the stop's gone above 22. The Nasdaq, the stop's now above 75 mentally. What we've also seen is Nasdaq's moved a little bit lower, down towards 51. The S&P, again, down towards 16. These are then the areas you start to sort of recognize, right, where can I now scalp from? I actually tried to sell the bottom of the original range, that 55 to 68 area, for a quick scalp down towards 51. This is a good example. Tried to hold that for too long, and the Nasdaq then jumps back up. So you're offside now. You don't want to still be in this trade, particularly when it flicks up there. Don't get me wrong, that is not a comfortable position to be in. Hence, then put in a bid, get out of the trade. So what you've learned there is the Nasdaq's actually got a lot more rush up in it. Even though it's had that bigger wave down, it's got that bigger sort of rush back. So you've got to be more passive in the Nasdaq. You've got to wait for it to go up to sell it to then come down rather than being aggressive on the sell side. The S&P, on the other hand, continues to hold down. Now starting to hold 15 area. Got a couple of lots on, so then try and sort of cover something when it doesn't break 15. And that's a good little scalp down. You take a little bit out of this. But the thing here is trying to maintain this core position in the S&P. Nasdaq, again, I'm just looking at where it comes up to and where it rushes down from, where it comes up, where it rushes down, to try and scalp some of those areas as well. The S&P now moves down towards 13. Nasdaq still doesn't really break much below the mid 40s. So at this point in time, can now start thinking, okay, well, I want to try and sell the S&P at the bottom of that previous range. Remember, S&P is less volatile than Nasdaq. It moves less. So you've got this sort of more stable area of trying to sell 16. Nasdaq, we can then look once again towards this sort of 58 area because it is having that bigger sort of whip up in it. If you can get filled on Nasdaq up 58, wonderful, even up at 61. So sold 68, sold 61. Now looking for a little quick scalp down towards sort of 51 again. And once again, it has that quick rush up. The Nasdaq's the one that you're very uncomfortable in. For that reason, just want to try and get out of something here. Don't want to be sitting in this one for too long. Again, Nasdaq then keeps on trying to flick up. stays below 68, but this is the one where we want to be trying to get out of the Nasdaq. It's still clearly having that bigger whip back up in it, whereas the S&P is consistently not breaking above 17 now. So it could be more comfortable. Once you're out in the Nasdaq and it's had that flick, be willing to sell higher again. So this way you pull your average price up and you can still sort of take little bits out of the trade. So there we go. Nasdaq down 71 trades, S&P down towards 16. What we're watching for now is that low down at 13 in the S&P. You're watching for the Nasdaq to get through the mid 40s. Once they do that, now you could have the opportunity to exit the S&P position. Sold more in the S&P, looking for the Nasdaq now to sort of continue below 51, trying to still get filled on Nasdaq 61, 68 area. A bit hesitant. There we go, back into a position in the Nasdaq. S&P now holding back, but again around that 17 now. Nasdaq equally not having that rush towards 68. So again, quite quick to be willing to get out of the Nasdaq, not trying to hold on to this. And remember, the Nasdaq's being used as your guidance market. So that's the one that's going to guide you. Now, for anybody who's also wondering here about the breakout, about this move. So out of the Nasdaq now, the S&P starts to break. So Nasdaq's through 51, S&P's still toying with 13, but as long as the Nasdaq stays down, you'd be confident to stay in the S&P. Looking down towards 10 and then looking for a further continuation. You see, this picks up a lot of pace now. Nasdaq's done 40 handles, S&P down towards 05. We've moved into a new area. So, and this is quite common when you're scalping, you will take some, even though this isn't a loss, but unrealized profit loss here. Market bounces back up very, very quickly. And you have this situation where, and I'll very quickly get you back towards the end of that, situation where the market's now moved essentially into a new phase. And we're now going to rotate 10 to 5 until we work out where the market now wants to go. Yeah, there's a lot going on there. It's very, very fast. Like I said, there's a lot of trades taken on, but there's a lot going on. It's very, very quick. But it's all about that, just watching these ranges and playing it up and down the range, because the market moves decent distances very, very, very quickly. And this is all because of these types of events.